Recording. All right, there we go. I'm going to mute everyone as well. There we go. All right, guys, hope you had a great week and looking forward to a great week ahead. We're going to start off with the data for the week economically. So this coming week, we don't have a hell of a lot of data because last week was a smorgasbord. So Monday, we have consumer credit. Tuesday, productivity revision and unit labor cost revision. Wednesday, job openings and wholesale inventories. Thursday, we have jobless claims, core CPI, consumer price index, and federal budget. And we have a producer price index on Friday, as well as consumer sentiment index too. So not a crazy busy week overall. I would look out for Thursday's core CPI and CPI numbers as well. That will be interesting data for us to look at, especially with regard to inflation. Also the Fed budget as well. That aside, looking at the earning reports for the week ahead, we have Jinko Solar tomorrow. We have Toll Brothers after market close. Tuesday, big ones are AutoZone prior to market open, Thor Industries prior to market open as well. And then you have Chewy and GameStop, as well as MongoDB after hours. Wednesday, you have Campbell Soup Company, Wednesday morning prior to market open. After hours, heavy hitter is Adobe. Restoration Hardware as well should have a significant move, I think, probably to the upside. They did very well last quarter. And then Thursday, you have Costco and Lululemon after hours, as well as Broadcom and Oracle. So not a very busy week overall in terms of earnings. Nothing too exciting overall. But still, I'll keep an eye on Costco primarily, Adobe, RH, Chewy, and GameStop, even MongoDB as well. It's not a bad idea to look at that too. And then obviously Oracle too on Thursday after hours. That might have an effect on the tech industry, right, as a whole. Looking at the expected and potential moves for the week, let me pull it up one sec. So we have the, or these are for December 4th, right, for last Friday. I guess we don't have the updated chart for this Friday. Okay, so for this week, I'm looking at Crisp stocks, and they've had a pretty serious run of late. There are a number of them to trade. The best one, in my opinion, is Crisp, CRSP, and it's already run up pretty fast over the last few weeks. It's now at 147 a share. It was at about 100 maybe a month ago or so. And it should have a pullback back to around 120 area, I think. But they've had a lot of positive news, and that's actually going to affect their competitors, right? There's Editas Medicine as well, which hasn't moved too much. It's bounced off that 30 area to 34.49, and their valuation is still pretty cheap overall. I think they're one of the better deals right now in the sector. There's also Intellia Therapeutics as well, which, as you can see, has run up pretty sharply in the last few weeks from 25 to now 43 and change. Also, Beam Therapeutics again, CRISPR, right? All these stocks move together, right? They move in tandem. So they've all had sharp rallies of late. I do expect a pullback at some point. Lastly, you have Bluebird Bio as well, which is pretty beat up overall. And they're recovering off that like 43 area. Now they're at 47 or so. I expect to run up to around 55 in the next few months. Those are the primary ones I'm watching right now. I'm also watching, obviously, Virgin Galactic. Pull up the chart on that right now, one sec. So you have SPCE. And I usually discuss this every week because it's one of my favorite companies to cover. Here it is, Virgin Galactic, right? So you can see that support is really heavy at the 15 area on the 1 year. And we've now broken above the previous high set back from July. So now our next point to mount and close above would be 28.79, right? So if we can close above that, because we closed at 28.74 on Friday, I want to see about a 5 cent push to the upside. That was the highest closing price we've seen since February the 14th, right? That's when we had that massive run from approximately 15 up to a high of 42 and change in the span of a few weeks, right? And my thesis here is that we have the test flight launch on Friday. That's the window start date. So it may not happen Friday. It could happen Saturday or Sunday or Monday, right? but I do believe it'll run into that launch date event, right? And given the high short interest in the stock, you can see a sharp short squeeze above 30, which will force shorts to scramble and cover, pushing it back toward all-time highs at around 42.50. I think it'll hit around 50 bucks in the short term. But again, the IV is very high. So you want to mitigate your risk by using spreads if you are betting on the upside. And again, don't listen to me all the time, guys, because I am often wrong as well. So keep that in mind. I'm just sharing my thoughts here. They're just for you to kind of get an idea of how an experienced trader kind of thinks, right? So looking at Virgin Galactic on the option chain, one sec, minimize this. You can see over here that the IV right now is 99.2%. So that's denoting daily moves of 6.2% each day, right? So you're gonna see a lot of volatility in the stock, right? And the current expected move for next Friday, the monthly OPEX on December 18th, is around $5 in either direction. So upside would be around 34 by next Friday. Downside would be around 24 by next Friday. Now, the downside, I think, would be realized only if there was an adverse result from their test flight, that being either a cancellation, a pushback again, date-wise, or obviously a total failure. I don't foresee that happening again, the pushback anyway, or the delay. So I do think we're going to see a run toward that 34 mark. And again, given the short interest, I think it get pushed to 40, up to all-time highs again in short order, right? But the premiums are pretty rich overall, right? Like you're paying basically 10% of the stock price on a 2-week expiration at the money call, right? So you want to use spreads to mitigate your risk. You want to buy, for example, a 29 strike call option, which is at the money, and you want to sell perhaps the upper target for next Friday, 34 strike, for about $1, right? This means you're risking about $1.30 or so to make $3.70. So you have almost 3-to-1 risk reward. Your break-even point is 30.30. If it doesn't transpire, you might still break even if it floats around 29 bucks, because each day time decay will take hold, right? And in all probability, you'll have a small bit of IV crush as well following the actual launch event, right? So there is a fair bit of Vega tied up here. Net, it's about 0.03. So if you got a crush of about 20%, you're looking at about a 60-cent loss net on the position. So you would lose probably about 50% of your value in your position, assuming it stayed stagnant and the IV crush down 20%, right? That's one position I'm looking at. I'm looking at also Editus, right? I mentioned that before. And the premiums aren't that high right now, really, given that the whole sector is running. I don't want to look longer term at this, not shorter term. So I may look at January 2022 leaps, perhaps, right? And right now I can pretty much buy the 20 strike leaps deep in the money. And you might be asking, why would you buy deep in the money leaps, Nick, right? Well, the reason being is that you're paying a fraction of the stock price, yet you get almost a dollar for dollar move with the actual option, right? So it doesn't pay a dividend. So why would you pay for the full stock price when you can buy an in the money contract, right? And then what you do is you do a per month covered call. You'd sell out of the money calls periodically. Keep in mind, liquidity is pretty crap on the stock, right? It only offers monthly. It doesn't have a lot of OI, right? So you won't get a lot of a premium, and you're also going to have very wide bid-ask spreads, so your slippage will be pretty high as well, right? So for example, what I might do is I might buy the 20 strike call option on Editus, right? So you're paying about, let's say, $17.50 or $18 midpoint, right? And that means your break-even point is 20 plus, let's say, 18 for argument's sake. Your break-even is 38, right? Well, in that case, I can sell anything above 38. That's above my break-even price. I'm fine with that. I could sell, for example, the 40 strike call for January OPEX, right, for $1.30 or so. That brings my debit down from 18 down to 16.70. My break-even is now 36.70, and I have upside of $3.30 for the next month or so, right? So ideally, it would be great if it stayed below 40 bucks come January OPEX. If it was above 40 bucks, then c'est la vie. I'd make pretty much $4 per contract, which is about 25% return in about 40 days, right? Not crazy risky, Not a crazy high upside either, but it's a smarter play in my opinion, right? And obviously, guys, do your own research on these companies because I do them myself over the weekends. Spend a lot of time doing that, and I understand my risk. I control it very well. But if you go all in, for example, in a position like this, you do have a risk of losing your whole position. So I would advise, take it with a grain of salt. Be very careful what you're doing, and manage your risk very effectively, right? Otherwise, looking at IWM as well. So one sec. IWM is the Russell 2000 ETF. It has run very, very high and very, very hot the last little while. Here's the chart on it, right? You can see that it's actually run up from that low end of October. It's run up about 25% or so in the last roughly month and change, right? Which is absurd for an index, right? And it has numerous gaps to be filled on the downside. The most notable one would be around the 163 area. There's also one, I think, at the 173.50 area as well. So I do expect a pretty sharp pullback at some point in time. You can see that when it runs up hot, like over here, for example, it does have a sharp pullback in short order. Again, same thing happened, well, to a lesser extent over here. It kind of puttered over here for a few months. It didn't really drop too fast, right? But you do see that when it runs up, it does have a nice decline following that, right? We've seen it a few times over here, right? You've seen it over here as well. I do think that this is an unjustified run because a lot of these companies that are in this index are performing very poorly right now, right? So keep an eye on this as well. If you are going to, short any index, I would say to look at IWM versus SPY or Triple Q. Otherwise, looking at SQ as well, Square, right? So SQ is looking to push back to all-time highs. It hit all-time highs not last week, the week before at 215 on the nose, and it pulled back. So any pullbacks to around the 200 area, I think, are very viable because what I think you're going to see is you're going to see a new support level hit around 200 area, and that will be an area of buying, and you might see an upside to like 220, 230 per share roughly, right? Otherwise, there's also PayPal, which is doing the same thing as well. Hit all-time highs back at 220.57 last week, and then it fell back down to 210-ish. Now it's back at 217 again. I think that they're going to do very well as well. We're seeing kind of an emergence of tech in the financial services industry, right? In PayPal and Square, and some of the conventional players like MasterCard, Visa, Amex, for example, and some of the banks as well, I think are going to take a bit of a back seat. Perhaps not Visa as much, but I think Amex and MasterCard will take a back seat to PayPal and Square in the longer term. Otherwise, looking at the Chinese EVs, if you guys want, because I know a lot of you are trading them. NIO, I do think is due for a nice pullback, and I know a pullback off the all-time highs over there at around 57.20. I do think the area of buying would be around 30-ish. Again, these are still very overvalued companies. They're very overhyped, and a lot of people are kind of comparing them to Tesla because of what Tesla's done on its run up. But keep in mind, Tesla is very overvalued as well. So if the whole EV sector collapses in the short term, you might be caught bag holding for a while, right? So that goes for NIO, Xpev, and also for Li Automotive as well, right? I did a video on this on my channel as well. I posted yesterday, all about price action on Xpev. If you want to watch it, it explains the expected moves for the few weeks ahead, as well as some ideas on how to trade it. Put ratio spreads are a good idea on there, and then you have Li Automotive as well over here, right? So again, sharp incline, usually it's followed by a sharp decline as well, especially when it's hype based and not rooted in fundamentals, right? So that's pretty much it that I have right now for the week. I'm going to do some Q&A, guys. Any questions about things that you're trading, looking at, anything you want to share at all whatsoever, feel free.
Yeah, I got two questions, I guess. So my first one is just another meme stock, I guess, Palantir. Everyone's trading. I know a lot of people are trading it. Essentially, yep. You're going to see a lot of pullback on that one, I'm guessing, right? Based on the same kind of thing, like it's overhyped.
Yes. Well, Palantir, the interesting thing about Palantir, in my opinion, is they don't really have any competition in the space, right? Like they're a very unique company, right? Someone asked me about them, comparing them to Cambridge Analytica, right? And Cambridge pretty much plugged into Facebook and the various social media platforms to essentially influence people's opinions, right? That was part of their gig, right? Whereas Palantir doesn't do that. Palantir just takes the data, disseminates it, and they use analytics to provide very meaningful insights to their customers, right? And currently, it's majority. The majority are government customers, right? Like CIA and SA, for example, different government customers. That's an area that gives them a lot of support because now they can afford to diversify into various other corporate customers as well, right? And also, you got Peter Thiel behind them as well. The founder of PayPal. I would not bet against him in a million years. I do believe in him as well. I think he's a very, very good leader, even though he's not the CEO. Alex Karp is, and he's also very strong too in a leadership position too, right? So, but keep in mind the lockup expirations are important to remember, right? I believe that Matt from our chat mentioned that he has a friend who actually trades Palantir or has Palantir preferred shares, and the lockup expiration, I believe, is in the next couple of weeks for those investors. Again, I haven't found that information online, but if that's the case, you might see a sell-off in the next couple of weeks into the December 18th OPEX. But I'm happy to sell cash secured puts to own it below 20. That's why if you look at, for example, the Palantir, PLTR. So if you look at the December 18th OPEX, perhaps, right, 20 strike is 50 cents or so. So if you don't mind owning it at 19.50 a share, you can sell next Friday's 20 strike. Again, if it stays above that, you collect $50. Not a crazy amount of premium, right? If you want some more premium, you go to January OPEX, right? You can sell as low as 18 if you wanted to for over $1. That means your effective entry price would be around 17 or so, which is not bad at all. I don't think it's gonna go back below 15 again, right? I think 15 will be the floor. It may touch it at one point, but I don't think it's gonna go back below 15 again, right? So any dips I think are buyable. Because again, like you look at, for example, I'll just give you guys a comparison, right, for fun. So you look at, Snowflake, which is, in my opinion, absurdly overvalued, right? So you look at Snowflake, right? And again, they're in the same industry, but also a little bit different as well. They have a market cap of about 100 billion already right now, with sales of 49 million. I believe from the earning report last week, the annualized sales are now at around 640 million, and they're still not operating at a profit. Whereas if you look at Palantir, they're worth, less than half the value of Snowflake, yet have about 50% more revenues right now, right? So I do think Palantir has the room to go to 100 billion market cap, which means that they'd be around a $50 stock or so, right? 50. Again, it's a newer stock. It's very volatile as well. You need to understand your risk and be okay with the risk. But given that it's a cheaper stock, I would say the downside is around 15 area. I don't think you'll see go back to 10-ish. I think 15 would be the floor on the stock, right? Also, one more note too is that Airbnb is also IPOing on Wednesday. That should be an interesting event as well, as they're going to be IPOing at the higher end of the range. I think the market cap valuation will be around 45 to $50 billion, which is pretty high already. But I do like the model overall. Yeah, I do think Airbnb is viable as well, as long as it doesn't shoot up like Snowflake did and double in value over the next week or so. Yeah. Anyone else? Any more questions, guys?
I got the second question. So pretty much looking at the whole industry, actually. So pretty much Georgia's having the runoff election. And I was wondering, like, let's say the Democrats win the Senate race there. Would that, I'm guessing that's going to do a big effect on the whole marijuana industry. Like, what kind of run-up would you expect to see from like companies like CGC and like Tilray?
So I actually had a discussion on that a couple weeks ago, and I believe the date is around January 5th, right? Is that the date?
Yeah, that's the date.
Yeah, so I actually discussed that with a few different people, including one fund manager, and he mentioned that there's a great tail risk here that the market could have a nice big pullback into that event, because if the Dems take the House, they can pretty much pass bills through pretty fast. That includes Biden's tax hikes, right? That would hit business pretty hard, right? So regarding cannabis, obviously, if they do pass bills that are favoring the industry, cannabis should shoot up. But I mean, You guys should ask Tyler James about that. Like he's worked in the sector before. He has a lot of insight into it. Tyler, what do you think about that, man?
To be honest, guys, with that bill, they should shoot up, but not as significantly, because the MORE Act is more so just even for decriminalization, not for federal legalization. So the benefit on one hand is that it would allow for a lot of these businesses to open bank accounts, because in a lot of states right now, they have to use such things as credit unions. So the fact that they would, be able to bank is a huge, huge landmark for that. Now, you won't see anything like, or a lot of companies, there's one company in particular, one of my buddies is trading CBDD. It's like a little bullshit penny stock. Like they're trying to, and a lot of cannabis companies try to sell on the hype of press releases. Even with the MORE Act, you won't be able to see federal export of cannabis in most cases out of country. So although, that's going to be the big kind of reason and push that everybody's going for, the MORE Act, to be quite honest, doesn't really allow for it. It's just more so, to allow for, decriminalization, expungement, and for the statewide trade of it, because it would be allowed more so on a state level. I do believe that there will be a significant movement if there is, but I'm also very skeptical if the Democrats will actually get the seats in that runoff. That's my concern, that if they don't, then it's kind of a mute point. If they do, it'll be a good movement. I don't think anything more than 10% though.
Okay, yeah, thank you. Good insight.
Awesome insight, man. Appreciate that, Ty. Eric, you mentioned you wanted to chime in on Palantir. By all means, man. Do you have a mic?
Yeah. As far as Palantir goes, one thing I do have a question as far as what you think it might do in the next 2 weeks. But for everybody else, as far as the industry itself, I have a lot of friends who've been using it. What people tend to forget is Palantir is 17 years old. Mm-hmm. Not only that, they are essentially ingrained in every single military branch that you can think of. And they have been used by everybody out on the field. They're long-term, they're not going anywhere. They're going to be volatile because they got the whole meme stock to them. Mm-hmm. But we got to take a step back. Is one, what you said about Peter Thiel, that guy, I mean, I wouldn't bet $1 against him.
Yeah.
Alex Karp himself has said it. His life revolves around Palantir. But the company itself, whatever all these politicians have to say, that it's snooping on people and stuff, if you've ever worked with the government, if you are in the government, you're not going anywhere, period. Like they are banking. Also, I'm under good impression to believe that they're going to win a very big contract for the tracing of all the shots given around Europe as well, which if that is true and it does come into fruition, I mean, you can expect the revenue of that.
Definitely, man.
Yeah.
That's very good insight.
So to your point as well, actually, a few of my friends are in fire and in ambulance services, and they're even telling me that they're been pokings around of having that even here in Canada. There's things like the digital ID adoption that they're considering. So I would definitely bet on Palantir to be at the forefront of a lot of that, especially with a lot of the COVID measures that have been taken.
I'm just trying to decide if I should. I was holding about 50,000 shares, swung it up, and then ended up getting shaken out a little bit. I'm looking for I'm starting to time my entries in. Curious to see if you think maybe this week we'll have another run up. So don't dump, for 30,000 shares or wait. Because a lot of people have been telling me, look, short term, this might drop maybe under 20. Mm-hmm. But I think after that massive sell-off we had Monday through Wednesday, it seems to be that the buying pressure is now starting to take over.
Yeah. So you mentioned you're holding stock right now, you said?
I was holding about 50,000 shares, then sold, and then rebought about 17,000 Friday. I'm looking to reload up again.
Yeah. So what I would do is I would do a combination of both. If you're buying the equity, I would also do a combination of selling cash secured puts at a much lower price. So for example, if let's say you want to get back to your 30K share stake, right? So you bought 17K shares already. Instead of buying more shares at the current price or even a little bit lower, what you may want to do is sell some cash secured puts for January OPEX, perhaps at 17, for example, for like around 75 cents. So it has a twofold benefit. One of them is that you collect a lot of premium, which lowers your average cost in your current shares. So if you're not assigned, basically your average price on your current stock position drops by about 75 cents or so, right? Secondly, if it does go below 17, you're able to average down your costs from, let's say 23 to 24-ish down to around 20-ish, because you're able to sell 130 contracts, 130 contracts at 17 strike, right? And if it expires worthless, you're basically netting yourself, 130 times 75 times 100, right? You're netting yourself, almost 10 G's in the span of 40 days for doing nothing, right? Assuming you don't mind owning it at like around, $20 a share average price, right?
If it drops to 20 tomorrow, I'm putting $500,000 on it. That's how confident I am on this company.
Yeah, long run, you can't go wrong with equity, in my opinion, right? Like, we've seen what happened to Facebook with their IPO. Facebook, for example, for anyone that hasn't been trading for a while, Facebook initially sold off hard after their IPO, right? So here's the chart of Facebook. I'll pull it up for you guys so you guys can see it. And Palantir is kind of like Facebook minus the social media aspect of it, minus all the junk, in my opinion, right? So here's the chart on Facebook. So initially they IPO'd at around $45 back in May of 2012. They fell down initially down to like to $18 per share, right? If you had bought over here, you were sitting, on a small gain pretty much for, a couple of years, right? To about 2013 or so, maybe even 1 year or so, right? But now looking back at this, right? Like if I told you that in 10 years, Palantir's at $300 a share, you would just buy the stock and hold on to it, for the next 10 years. You would say, why am I going to trade it when I can just buy it right now, sell covered calls perhaps, right? Again, Eric, if you're gonna have a huge position in Palantir, selling those far out of the money covered calls, I'm talking like 0.1 deltas out of the money, for every month or so, you can create a very, very nice dividend for yourself, right? A very fat dividend, right? One idea as well, though, instead of owning the equity, might be to also own in the money leaps as well, instead of buying the stock. Because, for example, let's say you want to buy the stock right now at like $24, right? Well, instead, you could buy the leaps right now, $10 strike price leaps, for about $15.20. You might say, why would I do that? Well, you're paying $15 instead of paying $24 for the current stock. You're paying a little bit of extrinsic value on it, right? But you have a lot of extra capital sitting on the sidelines in the event it pulls back. Right? So it's the exact same position because it doesn't pay dividends. So you don't care about any dividends whatsoever. And if you're in a margin account, you can sell poor man's covered calls against this position periodically to lower your extrinsic value, right? So if for example you got in for, let's say, $15, your break even is 25, right? Well, then you go ahead and you want to capture your extrinsic of $1 or so back. You need to sell above your break even point of 25 in order to capture it back. So you might go to, like, for example, January OPEX and sell the 35 strike, right, for a month out. In that case, you're lowering your cost in your position from 15 down to like 1370. Your break even is now 2370. You have the exact same position as you would with the stock, but you're paying like half the price.
Yeah.
Right. So option trading is all about capital efficiency, guys. Like, and thinking about ways to use strategies to your benefit, right? There's a time and a place for every strategy, and it's all predicated on implied volatility, your directional bias, as well as liquidity, obviously, and then also your risk reward desire, right? And also time horizon, obviously, right? So you might say, why would I buy 1 year out leaps? What happens in 1 year? Well, in 1 year, if it's at $50, you sell them and roll them forward 1 more year, right? You do the same thing over and over again every year, right?
Good points.
So just some food for thought, obviously, right? That's my opinion, but
quick question on the option. So the OA and the volume sometimes matters, right? Like, OA is like 391 or like, volume is like, 1 million. How that really, how much really OA need to be there? The reason is certain times I've seen the other groups, like, experts, they say, buy this so-and-so, FB calls on so-and-so day, right? When we see the OA in the TAS, it says like, only 300 contracts. That's all. 300. But actually the stock is really moves very well. So how that really, we need to, when we buy, how we need to see that, like, how much it needs to be in the OA side and volume.
So when analyzing open interest and volume, so first of all, you have to make a distinction between the volume and open interest. There's a misconception that volume and OI are interchangeable terms, right? I don't think a lot of people understand that Volume is the number of contracts traded on a given day. So the volume right here shows what was traded on Friday, right? From open till close. The OI shows the open interest on contracts that were already in existence prior to Friday morning, right? So the only reason why you want to use OI and volume primarily is to denote liquidity, right? You want to have high liquidity, which denotes tight bid and ask spreads. The reason being is that if for example, you're trading something that's illiquid, like Crisp, for example, right?
Your screen's on the wrong one.
Oh, sorry. Thanks, man. I appreciate that. I always forget to change screens. My bad. So yeah, so I was just saying, so, volume's over here, right? This shows the number of contracts that were traded on Friday from open till close. This shows the number of contracts that were open prior to Friday morning. And the thing about open interest is we only get the fresh data the following morning. So tomorrow morning, we'll see what happened with these positions. So for example, you have, OI on the 26 strike for Palantir of 3.24K. You have volume of 600 or so, right? Tomorrow morning, we might see it the OI go down from 3.24K down to like 2.6K, for example. That means that on Friday, we know this position right here was net selling of existing contracts. However, if we see go to 3.8K, for example, we know that it was net buying of new contracts, which denotes bullishness, obviously, right? And then I was going to say, what was my next point that I was going to make? I was going to say, what was my next point? I forgot. I was about to say it, and then I got distracted. Yeah, it'll come back to me, I guess. But yeah, so oh yeah, that's right. So liquidity, right? So for example, if you have Crisp, right, which is again, it's running like crazy, but it has very low liquidity on contracts. So like looking at Friday, for example, you see no open interest, no volume, and the spreads are massive, right? If you want to buy a 142 call for Friday, you're paying between $11 and $14.20 per contract. You can't trade that because you might buy it for $13. It might go up a few bucks in your favor. And if you want to sell it, you may still be forced to sell it for less than $13. So that's called slippage, right? To avoid slippage, you never want to trade illiquid options. It doesn't matter how bullish you are or bearish you are, whatever. You don't want to trade illiquid options, right? Slippage is too large, and it poses too large of risk to your position. It decreases the probability of profit on your trade, and actually causes most trades to have a negative expected value, right? So you do not want to trade positions that have wide spreads, which is usually associated with low open interest and low volume, right? You want to trade, higher liquidity, which usually comes with stocks like Facebook, Twitter, Apple, Amazon, for example, Netflix. Those higher volume stocks have a lot more open interest and therefore tighter bid and ask spreads, which makes them a lot easier to trade. Does that help a lot, Balu?
Yeah, it is definitely helpful. Thank you. Yeah.
No problem, man. No problem. All right, guys. Any more questions at all? Anything else?
Yeah.
Anything you're looking at? You want to discuss?
Laser.
Oh yeah, laser. Okay, laser. LAZR. Actually, I'll pull up the chart on that one sec. So the chart is over here. Where's my chart? I just lost my chart. Oh wait, I had to close some boxes here because too much going on. LAZR. So Lazr is a new SPAC. Actually, Aaron, you've done a lot of reading on it. You want to share some information on it, perhaps?
Yeah. So so we have a CEO on this. He started this company when he was like 17, Austin Russell, and he's now I think 25. So he's been doing this for about 8 years. He dropped out of I think Stanford or something his freshman year, and he took highly into lasers. So he's been developing this and had a huge injection of capital right off the get-go. Like his technology with LiDAR has 10 times the distance rate and 50 times the resolution of any leading competitor out there currently. Even I know a lot of people, I don't know if they're in here, but are promoting Mavis MVIS. And he has secured I want to say 7 contracts with several major auto manufacturers out there like Volvo, Daimler, Toyota, Intel's Mobileye. And they just debuted the other day, I think on Thursday, with the Spac, which is a reverse merger, leading into them being LAZR or LARZ. And it's pretty interesting, like the technology. So like Volvo and Daimler are looking to roll out full production in 2022 of like their commercial trucking and possibly regular vehicles as well, but primarily right now it's on commercial. So like their LiDAR technology is, in my opinion, second to none out there that is available. And then another aspect to this, not only their LiDAR technology, is their future data. So no one's really talking about that either at this current point in time. And it's very early, maybe 2030, when all the cloud infrastructure's out there with the LiDAR. You got like Facebook, all these other companies that are selling this data. Well, right now they're just emphasizing on, selling it to autonomous vehicles. So, there's just tons of upside, in my opinion, on this. Don't trade on my opinion, but do your own research. I think Nick is pretty excited about this as well, but I like this as a very, very long.
Yeah, I definitely agree, Aaron. I appreciate that insight. I think the big thing with Lazr that I see, and that I think Aaron sees as well, is if you're playing the EV sector right now, it's hard to determine who will be the big winner, right? Because in automotive, there are so many competitors globally, right? So right now, Tesla appears like they're the EV winner because of the stock price performance. That's very misleading because in Europe, actually, I believe it's Volkswagen who's outperforming them by a wide margin in sales right now, right? On the EVs. So a better way to play the EV boom longer term, also in the self-driving car boom as well, would be to play the suppliers that can supply the technology to these automakers, right? And one of them would be LAZR, right? So you're pretty much betting on the technology, not the industry, or not a certain company where you may or may not be wrong, right? Like, for example, if you want to bet on Chinese EVs, you could buy Li, Xpev, and Neo, and one of them may do well, two of them may do poorly. You don't really know, right? But if you're betting on a tech provider that has, superior technology and is way ahead of everyone else, that could be technology that's licensed and sold to every auto manufacturer in the world, right? And that means that you benefit from booms across the sector versus a company specific boom, right? So you're kind of spreading your risk out versus spreading it into one company. Obviously, there are risks associated with this. It shot up from like $18 or so on Wednesday to it's now $33 or so. It might go back down to $20 again, right? Who knows? But by the same token, it might have a serious run of 50 or $100. We just don't know, right? Because the long-term market or total addressable market based on their prospectus was $150 billion, right? If they capture even a fraction of that, let's say they capture 10% of that, so 15 billion in revenues in the next 10 years. If they're trading at a price to earnings or price to sales multiple of, let's say, 20, that would denote a market cap of about $300 billion, which means they'd be trading at about 30 times the current price. So about $900 a share.
It's huge.
Right? Yeah, Jake. So again, one thing about the markets you guys have to understand is that no one ever knows with any kind of certainty what will happen with any position. So Jake asked, can we expect a pullback from Lazr? It's possible, it's probable, but there's no assurance of that happening, right? Again, just like with Palantir, given the rich option premiums, the cash secured puts are probably a good bet if you want to get into Lazr, because, one sec, let me show you the option chain. One sec, guys. Sorry, my screen went away. Option chain is over here.
Yeah, and you were discussing me too, your kind of strategy too, Nick, because you just, took an acquisition on what, a certain number of shares, and you're talking about doing what, shared secured calls on the 20 strike.
Yep, cash secured puts on the 20 strike. Yeah, so for example, you could instead of buying the stock right now, you might say, you know what, I want to own the stock. I'm going to sell the 20 strike put for, again, $2.20, right? You're taking advantage of high IV right here. It is a month out, obviously, but you'd be owning the stock at 20 minus 2, about $18 per share or so, right? So that might not be a bad way to get into the stock. If for example, you want to buy 200 shares, maybe you buy 100 right now at the current price. Again, it is high risk. It's a newer company. It's a SPAC, right? Take it with a grain of salt. It is still very high risk, right? But if you want to own 200 shares, you might buy 100 shares right now at 30 or so and sell one cash secured put. That would also decrease your current price of your current shares by about $2. If it stays above $20 come expiration, you still own your stock. You can do it again for February and again for March and again for April and again for May, right? If you want to own 100 shares extra, right? Obviously, if you have a larger account, you can extrapolate that to, buy 1,000 now, sell 10 contracts, right? Buy 5,000 right now, sell 50 contracts, right? Depends on your account size. I'm just speaking in small numbers because I'm not sure what you guys are playing with, right? So, but yeah. Any more questions, guys?
What about FCEL, FCEL?
FCEL? I haven't looked at that at all, actually. FCEL. Let me see.
They do hydrogen and shit like that. It was put on my radar before they had their massive run up. And the same person, the last 4 stocks he gives me, ended up doing 200-300% within like 2 months. So I'm starting to wonder what the hell he knows.
Let's see. So yeah, they've had a pretty serious run. Again, I mean, looking at their financials, and right now fundamentals are kind of at the window, but looking at the valuation, $2.17 billion market cap, net loss right now of $110 million, sales of 65 million. Looking at their performance over the past few years, sales have not even been growing. They've actually been contracting. So sales, net sales for 2018, 89 million. Net sales for 2019, 60 million. So it actually went down by about 30 million. And for the past 12 months, net sales of 65 million. So there's not really much growth there. I wouldn't stay in it. At a cursory glance, I wouldn't stay in it. I mean, it may be great for volatility, but I don't think it's a great stock to be in.
Yeah, makes sense.
Yeah. And then someone asked about GameStop as well. I'll go over that one, and then I'll probably cut it short unless you guys have any more serious questions or anything they want to discuss. So GME, right? So GameStop, again, it's had a major short squeeze on it. I do think it'll pull back to around 12 area. What was your primary question? Who asked it? Was it Jordan or who asked that question? Yeah.
I did.
Oh, so what was your question again?
No. So I was just wondering, like, I know there's been, I guess, this one had a pretty good run up. It's in the past couple of weeks. And,
Yeah.
My question was, I mean, looking at financials, and I guess the biggest reason why it's jumping up from what I've heard is because of Cohen, who's kind of recently joined their board. And people are saying that this in the future can be like almost like a 10 times bagger. I'm not really, I'm still trying to understand stocks and all that. So my question was, like, what are your thoughts on it? Have you had any time to do research on this or no? Or
I haven't looked at it myself, but I know the model is pretty poor, right? One of my old friends used to manage a GameStop, back from high school. He was there for a few years. The model isn't that great overall. I think after the boom of the PS5 and the Xbox Series X sales, dies down in the next few months, you're going to see a lot less traffic in those stores. I don't think it's a great bet longer term. I think it's a poor bet. It's one of those, again, you get a fat squeeze, kind of like Kodak, right? Pops up, comes right back down again, right? I don't think it's a long-term hold.
Okay, that's what I figured. So I just want to get you, but thanks.
Yeah, no problem at all. Yeah, it's definitely a meme stock in my opinion. Yeah, Eric mentioned that too, right? What else was there here? Let me see. Yeah, puts. Yeah, I mean, yeah, Jake, I don't like buying puts on stocks that are below $20 just because the upside is so limited, right? Like you don't really get a lot of upside. I want to be betting on stocks declining that are trading at absurd valuations, like Snowflake, for example, or Tesla, where they're sky high and they have a lot of room to come down on any kind of bad news, right? GameStop, if you buy a put, at the money, perhaps you pay like $1.50 or $2 for that. Your upside, if it goes to 0, is like 8x, right? Assuming it doesn't go to 0, it goes to like 12 again, you might make double your money, right? Yeah. Yeah, TMX. Yeah, for Amazon, I'm not really too sure about Amazon. I do think we're going to see a cooling down period in the market, given that we've run up so much. Like you look at the SPY, for example, right? We've already had our Santa rally, right? I do think it's possible we tag the 275 area, sorry, 375 area. But as you can see, it's near the upper end of the channel right now, right? Around 370. I do think you're going to see a pullback somewhere down to around 350-ish. And again, remember that January 5th key date that we discussed earlier. That date can be a very, very big catalyst to a downside move back to the order of 340 or 330, perhaps even tagging that lower line over here, right? So remember that, and that's not too far away. That's only a month away, right? It's not very far away at all, right? Also remember, if you guys are trading any contracts past Christmas, don't forget that you're going to be losing a few days to Christmas and Christmas Eve, I believe, as well, and also to New Year's Eve as well, and New Year's Day, I believe, right? So keep an eye on that as well, because you're paying extra premium for those expiration dates. If you're buying January 15th OPEX, just don't worry about it, obviously. But if you're buying, the 2 or 3 weeks out, for example, and it goes past Christmas, remember that you're going to be losing a few days, right? So keep that in mind too. Otherwise, yeah, I think that's pretty much it, guys. Like, if you have any more questions, hit me up, obviously. Be happy to chat, obviously, on any topics you guys want to discuss. I'm available most days during training days, obviously. I'm in voice chat as well for you guys that are in my group. And yeah, if you guys don't mind, also sub to my YouTube channel. I appreciate that as well. And I'll be posting this session on there recording, and I'll be posting a few videos on different topics as well over the next few weeks. Yeah, I'd very much appreciate that. I'll post it right here in chat, so you guys have a link to it right now. I just posted it for you guys. And yeah, I appreciate your time, guys. Any more questions before we go?
All right. Thanks for doing this.
Yeah, guys. Yeah,
thanks, man.
Again,
yeah, thanks, Nick.
My pleasure, guys. Every Sunday, 8 p.m., same thing, right? So we're doing more sessions every Sunday. So yeah, if you want to join again, I'll post the links in various servers. You guys can join up and have questions ready. Happy to answer them, obviously, right? But yeah, guys,
next week.
No problem. Trade smart, guys, and I'll chat with you guys tomorrow, okay?
Thanks, Nick. I appreciate it.
Cheers.
My pleasure, guys. Cheers. Take care. Later.